Hello traders and investors, I'm LA Little and this is your daily NeoTA wrap. We take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves what happened today, or what does it tell us about the coming ones. Do a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube and it's under the channel LA Little. If you haven't subscribed, just reach up in the right hand corner there and subscribe. And each time content's pushed, you'll get a notification. That's an easy way to stay up to date with all the goings ons here in the markets. As far as what happened again today, more selling. They have pressed this thing and pressed it pretty hard. They've been doing a lot of flipping back and forth in these indexes in terms of which way they want to turn this thing, and so far they've been unable to pull it higher. The Russell was struggling again today, but actually the big losses were up here in the listed issues. You had financials, energy, industrials, a bunch of those very weak and pulling this down, although energy started to turn at the end and actually did turn for tomorrow, it looks like. NDX was the leader again. I mean, it's tech leading us higher and it's still trying to lead us higher, and it was actually positive on the day. If you look elsewhere, had some big losses again in Europe. The euro actually didn't go up that much, but you had some big losses there. And then oil flipped around. It was down about 2%, flipped around and tried to go higher. Oil's actually going to try and go higher tomorrow as well. Dollar down today, and I'm suspecting that the euro is going to try to rise, and that's probably going to keep some pressure on the dollar. If we look at the markets overall, so we'll start with what has been the weakest index, which is the Russell. Russell still not giving us a sign that it's going to turn yet. It's coming down and testing into this bar now. I'm just looking for bars where there's a little bit of volume on them. Bottom there is 1152. You got down into about 1151. So it actually did test into that, into the high of the low. A lot of times you'll get a little bit of a bounce out of something like that. But in terms of a definite type signal, we don't have anything big out here telling us that this thing's going to turn yet. If we look over at the S&P 500, there's really nothing here. I mean, it's the same thing we've been seeing, just up and down action. They sell it in the morning, they buy it in the afternoon, and that's the way it looks there. It looks the same on the NASDAQ, although stronger, and also looks the same on the NDX, which is even stronger. And so index-wise, there's really not much out here telling you anything different, other than the fact that these markets still don't want to sell off. And if you look at these markets, the U.S. markets, in the context of the bigger picture out there, you're going to see relative strength. And it's actually, the U.S. markets are actually holding up quite well compared to everything else you see. If we go to some of the commodity countries, for example, and I'm just going to pop through a few of them here and give you a view on a daily and a weekly. Here's the all ordinaries coming back after the lows. Hanging down here at the lows. And I want to point out on all of these are still doing bearish retest and trying to regenerate lower. So it got over 1 week, on the weekly here, got over 1 week, tried to test up into it again, couldn't get over it. This thing's going to try to regenerate lower. And so that's the Australian. If you look at India doing the same thing. On the daily, it's breaking down. So you're under the swing point low here, you're attacking that swing point low. And if you pull it back, you've got the same thing happening here. You're going after the lows. Now this one, same sort of a thing. Let's pull it up and draw it in. You had a retest regen here. You had one there. So you got over the first one. You got up to test the second one. It failed. Now you're trying to regenerate lower again, going after the lows. And if you look at this closely, what you really have going on now is you've got an ABCD structure to take this quite a bit lower if in fact it starts to break. That's India. If you look at Brazil, Brazil, another commodity country, this thing's getting hammered. It's going after the lows again. You look at it on the weekly, same sort of thing. Does a retest regen, gets over at 1 bar, back down the other way, going to try to break out the lows. And our friends up in Toronto, look at these charts. It's like death warmed over up here. These guys break a swing point low, breaking another one. If you look at it on the weekly, they're going after the big wide price spread bars low. So everywhere you look in commodity country, these indexes continue to get hammered. If you look over at Asia, it doesn't look that much better. So you've got Hong Kong, for example, breaking a swing point low. I think they broke it. I guess they didn't. They didn't quite break it, but they're right at it, and volume expanding. You are coming into this. So actually Hong Kong, now that I look at it a little bit more carefully, Hong Kong tested into this bar, and they're going to reverse it off of that. So you get a bounce out of here first, but it probably is going to come back and try again. So I don't see any strength in overseas markets. And if I pull over and look at the DAX and the CAX, the German DAX actually today did a stick save. Now that I see the volumes on it, 10.63277 was the low. You get up underneath there, back over it, you have less volume. This thing's going to try to bounce now. This is not a pretty pattern the way it's setting up here. You kind of got this little H-type pattern taking place. If it breaks these lows, there's just nothing up underneath it, right? You got a gap here, and then after that, you're going to come back after this. I suspect before this is over, it is going to come after this, but it looks like there's a bounce in between the way this thing's set up today. And France, same sort of thing. Looks like it's also going to try to bounce, less volume, test under the low. It's going to try to bounce out of here. Less volume compared to 1.5. Yeah, a little bit less volume as compared to this swing point low as well. So it looks to me like you'll get a bounce out of here tonight or for tomorrow in Europe. How far? That's a different question. Can they get back up and a little bit deeper into these swing point lows? You don't know. It's set up for a bounce though tomorrow. So a little bit of a maybe a pause in the euro as a result of that. That's actually interesting because I was looking at the ox markets earlier. Oil looks like it's going to turn. I'll show you that here while I'm here. If I look at OIL as a proxy of the West Texas Intermediate, you can see here it gets under back over. And I believe that was true on the futures as well. I didn't look at it at the end of the day, but it looked like it was setting up that way. Why are all these emerging markets doing so terrible? I mean, if you look at the EEM as a group, you can see the push on it down to these lows. It tests into it. What is it, 821? You did 708 into it. So this one also going to bounce, but this is not a pretty picture. The way these things keep building their structures out and completing them to the downside. The one that's still in play, or actually it looks like it's done now. So this one actually finished another one. So get a bounce out of here and then try to set up another one inside of it. And you actually had one here too, a nested one. So it finished off its ABCD structure. So it looks like the emerging markets can get a push back the other way. But if you look around, the corporate defaults that are taking place in the emerging markets, they're at their highest level since 2009. And they're up something like 40% higher than they were last year already. If you look at Standard & Poor's numbers, the EEM is a reflection of that. And not only are they having problems, this collapse that we just looked at here in oil, there's some real palpable feeling out there that we're going to see debt structure here start to go sour and go south on these kinds of pushes lower. Oil's already broken that low now. Whether it holds it or not on the week is a different story, but you're getting to the point where companies can't pump at the rate they're pumping and at the price they're pumping. It's just not going to make sense. They're going to have to shut these things down, and they're not going to be able to pay their debt back, and there's going to be losses as a result of that. And if you look over at what happens in those cases, high quality corporate bonds, for example, you're seeing already pushes down in these LQD, for example. It's got to bounce back up, but you're seeing a lot of pressure on even the high corporate, the high end side of the corporate bond debt. on the junk type structure. So I think that a lot of this is a reflection of that. If you look at what happened in the financials today, the financials themselves were really pressed to try to hold. Now, although in the the large caps here, the XLF, those really aren't about debt. Those are more about regulations and just the continual lawsuits. But where you probably would see more of the losses show up would be in things like the regionals. So if you looked at like the KBE, for example, or the KRE, these regionals took a hit today, and they've been taking a hit, and I suspect some of this is really tied to this whole ideal of corporate debt defaults potentially, and some of these guys holding the bag. So the reflection of these issues, they just keep rolling downhill, and you keep seeing the fallout in other places that you don't immediately think about, but as you see these indexes roll over, you start to realize, well, a lot of people are selling just in case that they're not going to be stuck with some of these. Because the other side of this is these guys are going to make more money if the Fed raises rates. So if we circle back around and we ask ourselves, okay, what does this all tell us, right? If I come to the Nasdaq been the strongest. NDX, of course, within it even stronger, but it's still toying with these tops and still trying to get over them. If you pull this back and you put it on a weekly, you can see that this is where all of the congestion exists. You had a breakdown bar here at 51.33. You're trying to trade over it. You got the 51.39 this week. It's still hanging up there. It doesn't want to give it up. Of course, the high is back over here at 52.31. If you pull this back one more level, put it on a monthly, 51.75. I mean, you can see that was the breakdown bar off the top. That was where the big decline came from. And you crawled right back up to it, 51.76, 51.75. So you're up there where all the resistance is. If you want to be a short seller, this is where you short sell it. That's what's happening. That's why you're having the congestion in this area. You can look at the S&P 500, see the same sort of structure. That's what's going on. If they get over these levels, they're going to get a squeeze higher. That's what they're trying to do. If they don't, of course, the risk is you drop back down again. As far as tomorrow, Europe's set up to try to bounce. I suspect our markets will do the same. We'll see how far they want to carry them. Have a great one. Thanks for joining me. I'll see you next time. Until then, I'm LA. This is and was your daily NeoTA wrap. Have a great night. I'll see you next time. Good night.